Hi there, and welcome to the Alpha and Omega of Trading and Investing. My name is Charles Goddard, and just by way of a brief introduction here, you can see my designations after my name at the bottom of the slide, and they represent many hours of sweat and tears to achieve those. But I feel that the part of my training that qualifies me to teach you is the hours and money I spent with the grizzled veterans of the trading world, the old traders out of Chicago and so on, who taught me what was truly important when it comes to trading and investing. And my whole goal here is to take you out of the realm of subjective, out of the realm of esoteric, and show you that basic tools and basic methods and a basic process will get you the returns that you're looking for on your account. If you're just starting out, I'll show you A to Z, and I'm going to convey some of that in this little video. The A to Z of how you can trade your own money to better effect than the situation you have now. And I don't care whether it's a so-called professional. You can do better by paying attention to your own money with basic tools and just a little bit of effort. And so I spent 20 years in the investment industry. I left the industry as a discretionary portfolio manager. I spent the last few years working with individual students in workshops and one-on-one mentoring, and I'm bringing you those same tools and methods that I taught them to my course. And but you don't know if it's for you. So this is the point of this brief introduction. It's the point of my basic books. One's available to you. If you go onto my blog, all the connections and details show later on. If you go on to the one of the links there and scroll down, you can have my basic trading book, and it will be sent to you no cost. And you can establish between what I'm telling you on this video and that book, is this really for you? So okay, so let's move on to the next slide. So what you're looking at now is my basic chart setup. Now, if you're a rank beginner and you don't even know what a chart is, essentially what we're looking at is a graphic look at the move of the price of a stock. In this case, it's Apple. This sort of charting is available to you absolutely free on the internet. This is actually stockcharts.com. You can get this from your investment account platform, and my setup is very basic, and I keep it basic so that these tools are available pretty much with 100% of the platforms. So at the top and the bottom we have momentum indicators. They're basically giving us a reading on the underlying energy behind the movement of the price. I typically have 3 moving averages, an 8-period moving average, a 21-period moving average, and a 55. Now on the next slide, I'm going to show you a very basic trade setup that I use, that I'm using on my blog currently to demonstrate this as I trade a theoretical portfolio. So let's move on to the next slide. This is my chart of the S&P 500, which, if you don't know, is a US stock index of the 500 arguably largest companies on the planet. Again, if you are brand new at this and don't know anything, don't worry about it. It will all come clear. And what I want to show you right now is even as a beginner, you can recognize this trade. So let's take a look here. This is a trade that's actually on my blog. Details are on the last part of this this video. This is an open trade currently. as we speak on February 17th. And essentially what I do in this case, in this method, is I've got my three moving averages: a brown line, blue line, and red line. So what I'm looking at first of all is the trend, and if the blue line is above the brown line, I'm going to assume an uptrend. If the blue line was below the brown line, I would assume a downtrend. So now once I've got that, so I started looking near the beginning of February at four symbols. I then added a currency pair, which will be explained. Um, and so I'm looking at an uptrend, and then you can see the red line dip below the blue and then come back above it. Now that to me is a trigger to buy in. So we've got an uptrend, in which case we're going to be buyers. We won't go into the short selling at this point. So you can see that once the red line crossed the blue line, I put in a buy order just above the candle that the lines crossed. So after the close of the day or the next morning, but not when the market's open, I put my trade in at just above the that green candle, just above that horizontal line that's at the top. That trade was still doing well as of Friday. So I will now explain to you what my next steps were with this. Now, I think I'm right in saying that even if you don't know anything about stocks, if I told you, okay, if you see an uptrend, i.e. blue line over brown line, if you then have a red line that crosses the blue line, then you have a trade. I think most people can recognize that. Okay, so let's move on. Now, the big problem many people have with trading stocks or currencies or commodities is they think that they are then just subject to the whims of the market, and we simply don't do that. I will be showing you in my course, and you can see it in the book that you can get for free. That if you use stops, in other words, that it's a level underneath where you place your trade, and you put it on at the same time you place your trade, that if the market goes against you, if your price drops below that stop level, you are automatically out of that trade. Then the next level to protect yourself is with capital allocation. Well, the two go together actually, but capital allocation. So you're going to use only 10% of your portfolio or your account per trade. And then you're going to place your stops in such a way that you never risk more than 2% of your portfolio on any one trade. And that gets explained more fully in my books. I go through it very carefully in my course. It is key. These 1 and 2 here are more important than your investment selection. They are vital. They keep you trading, they keep your account in good order, but I have seen countless people, including my own students, who simply do not obey these rules, and they come to me and say, well, I lost a lot of money doing this or that, and it turns out they never obeyed these rules. It doesn't matter if your trade is got landing lights on it. You follow the rules. I'm going to show you how we would take advantage of a big move without adding any more risk than I've just described to you. The big move is what we're after. The big move is what we're probing for with small trades, and I will show you all of that. So let's just take a look how that works on a graph. I've put some yellow circles on this chart, and to just demonstrate something that so we have a couple of places that you can see where The blue line is above, in this case, the green line, but it's like I said, the details of this will be explained to you. But the trend is up. The red crosses the blue in a couple of places, giving us buys. And but now the question is, where are we putting our stop? And the two black lines you can see, depending when you got into the trade, the two black lines are where we would put our stops. And this is where these are clearly levels of support. Again, another item we cover in extreme detail in the course. And if so, the price drops below those levels of support, then we could be wrong in our trade and we need to be out of it. There's no hoping or wishing in this. It's just follow the rule. I don't want anybody thinking we are the weakest link in this process. So we need to stay as objective as we can and just act with what we see. Now, in the case of the S&P 500 that I showed you previously, the stop was put on the equivalent of one of these black lines, and I made it a trailing stop. Now, trailing stops are wonderful things. What will happen is, as the price goes up, the stop will follow it up, will follow the price up at the same distance at all times. And if the price turns against me and falls back, I get stopped out automatically. We cover these in detail, not only in my course, but you can have this information for free in my book one. You just have to scroll down on the link at the end here, and you can have that, and you'll have a fuller explanation of all of this. So let's move on. Okay, so this is the last slide, and just a little recap as I try and keep this this video short for you. The blog address, you can see it there, where I'm trading a theoretical portfolio using the moving average crossover method that I've just talked to you about briefly. The trades on that blog will be dissected. So when the S&P 500 is finally stopped out, I go through where I got in, where I got out, and what our profit or loss was. So you can follow that and see how one simple method, trading 5 symbols, like hopefully we do okay with that, and I prove a point. If you want more explanation of some of these concepts, you don't have to buy my course, though I'm going to encourage you to do that. You can get going with a free book by clicking on that link that's showing next to the free book. You may have to copy and paste, I'm not sure. And scroll down to the bottom and just hit the button and then you'll have to fill in your email address, and we'll send you a free book. If you've got any questions for me, any comments, any criticisms, then drop me a line. Those are my email addresses, and I'll be most happy to answer them for you. So thank you very much for taking the time to listen, and I hope you'll explore this all a little further. As I said, my firm belief is that even a rank beginner can learn to manage their own money to good effect. And if you are a trader who has been struggling with consistency, this will also help you to turn that around with a few rules. So thank you again, and we'll see you soon.